Good afternoon, dear traders. Now let's turn to US dollar against Japanese yen, where the situation has become increasingly interesting over the past few days. Despite the recent pullback, the US dollar continues to trade near multi-year highs against the Japanese yen. It's important to understand that the market is now approaching the very area that has repeatedly prompted intervention from Japanese authorities in the past. The 160 yen per dollar level has long been regarded as a highly sensitive threshold for Japan's policymakers. It was about this level that Japan's Ministry of Finance previously conducted large-scale currency interventions, selling US dollars in an effort to halt the rapid depreciation of the yen. During July 1st and 2nd, market participants once again actively debated the possibility of similar intervention. Following a sharp intraday strengthening of the yen, speculation emerged that the authorities might have stepped into the market. Although no official confirmation of intervention was provided, investors remain highly cautious. In fact, Japanese officials have increasingly signaled that if intervention becomes necessary, they prefer to act without prior verbal warnings, making any move as unexpected as possible and preventing speculations from positioning ahead of time. From a fundamental perspective, the story remains largely unchanged. High interest rates in the United States continue to support the US dollar, while the Bank of Japan maintains a significantly more accommodative monetary policy. And this wide interest rate differential remains the primary driver of yen weaknesses and continues to support the carry trade. Technically, however, the market is approaching a critical point. As long as US dollar against Japanese yen remains above 160, the broader bullish trend remains intact. At the same time, this very area could become the trigger for another intervention by Japanese authorities. As a result, traders are now watching not only economic data and Federal Reserve decisions, but also every signal coming from Japan's Ministry of Finance. So, a single unexpected intervention could be enough to trigger a decline of several hundred pips in a very short period of time.